Very good morning to everyone on this live session on options trading. So, I would just want if you all can write in the chat and see that you are able to see the screen clearly and also you are able to hear me clearly. So, if you could just type in the chat if you can hear me clearly. Okay, thank you so much. So, we'll wait just for a couple of minutes and then we shall start the session. Thank you. Uh, okay, I definitely will be loud and ensure that you are able to hear me clearly. And I'll have this session in English, and I'll also, wherever it's important, I'll be covering that in Hindi as well. So, so we shall start now on the basics of options trading. So, what exactly options is, how you can trade options, which options to trade, which options not to trade, and also the learning as to what is the learning for options. So इसमें क्या है कि मैं आपको सबसे पहले वेलकम करता हूँ इस लाइव सेशन में माई सेल्फ अमरदेव सिंह हेड एडवाइजरी एट एंजल ब्रोकिंग. I will be taking you through the options world. Many of you might be already trading options, and at the same time, some of you might be new also. So, what exactly is this options here? Options exactly है क्या? Or do you really need to be afraid of it, or do you really need to take it as it comes? And so I'll be talking about all that, clearing many of your misconceptions. आपको एक ओवरऑल आइडिया दूंगा कि ऑप्शंस बेसिक्स ऑफ ऑप्शंस एग्जैक्टली ऑप्शन ट्रेडिंग है क्या, किन चीज़ों पे ध्यान रखना चाहिए. एंड बिलीव मी, इफ यू फॉलो व्हाट आई से, यू विल डेफिनेटली, your learning curve will increase significantly. So that's the objective of this live session. And since the market is also live, so I'll be showing you some option charts as well. So then let's begin on this session. So the areas which I'll be covering today is first of all option basics. What are options and what are the different types of options? And the next question comes is why options? Kyun? Options kyun? Then we'll look at practical insights into options trading. Why exactly means options? What are the benefits of options trading? And we look at some of the option Greeks. We look at open interest, how to analyze that, and we look at some, in the end, some common mistakes in options trading, which many people make while trading options. So what are those, and what you should do about it? So first of all, you have to understand that in terms of, I would just want to give you a picture here that if you look at opportunities and rewards, because opportunities, rewards, think of options and futures, means futures and options as again the highest stakes game in the world, where fortunes are made and lost daily. So it's the biggest, you've got the highest stakes here in this market, and you can, the best part is you can trade both the long and the short. So if you are bullish on the market, you can buy calls or you can sell puts, or you can go for strategies also. Likewise, if you are bearish on the market, you can buy a put or sell a call. So I'll be talking about all that in detail. तो आप समझ पाएंगे कि options को कैसे use कर सकते हैं, how you can use futures also. So the best part is options derivatives, they give you to the facility to trade, or the opportunity to trade both from the long side and the short side. So you don't have to become an eternal bull or an eternal bear. When the market is bullish, be a bull. When the market is bearish, be a bear. So that's the advantage of trading options. That's the advantage of trading futures. The other part I would want to say is that luck. If you see luck, people say he's lucky, so he's made some money. Yeah, luck plays some part, or plays a part in the short term. But in the end, in the long term, only those players who play the game better will triumph. So what I'm trying to say is that you have to gain experience, you have to gain knowledge, and you have to manage your money well. That's very important, because if your capital only gets wiped out, then how will you continue in the market even if you have learned everything? So your learning has to be there, your experience has to be there, your knowledge must increase, while at the same time your capital should also be preserved, so that by the time you are ready to play the big game, you are well versed on the money management side as well, risk management जिसे कहते हैं. So no method is foolproof. You have to understand that there is nothing called certainty in the market. It's all a game of probability. When the probability increases in your favor, when the odds are in your favor, then you stand a better chance in the market. So no method is foolproof, but my endeavor here is to help you place the odds in your favor, कि odds जो हैं वो कैसे आपके favor में आए. So that's the objective. So ultimately, acting in a disciplined manner holds the key to success. You have to understand that trading, and I would say trading, any form of trading, requires a lot of discipline. Even investing requires a lot of discipline, because if you don't have the discipline, then you might be doing all the wrong things and you are not correcting yourself, because there's no one to tell you what you have done wrong or what you need to learn. So that's the reason you have to be objective, you have to be disciplined if you are to succeed in this market. So now we'll just briefly touch upon how are options different from stocks. So we look at that perspective. If you look at stocks, like stocks, you can buy and hold them for days, weeks, months, years. You can keep on buying. So that's a good way of wealth creation. But there also you have to focus on quality stocks. You have to focus on stocks which are good on corporate governance. Whereas options and futures, I would say derivative instruments, they have expiry dates. Just like in medicine or anything that we eat, consume, there is an expiry date to that. So options also have an expiry date, but stocks don't have an expiry date. So you can buy a stock and hold it for long as you want. But in options, it is expiry. Like we are in December, we will be in December, so now we have the December expiry series. So we'll have the monthly expiry series, and then we have the weekly expiry series in the index options. So it's the expiry which makes it all the more interesting. So you have to roll over your position in case you want to continue to hold your position. That's one key takeaway between differentiation between stocks and options. So you should never trade options as you are trading stocks. These are two different I would say instruments altogether. It's just like, to give you a better example, suppose you are very good at playing cricket. Now you want to play football. So can you play football with the same rules of cricket? No, the rules are completely different. Likewise, stocks trading is very different from options trading. So you cannot have the same rules for trading options which you had for stocks. It's a recipe for failure. There could be some common rules, but many rules will be different. So I will be talking about all those as well. So stocks are meant mainly for investing, whereas options are primarily used for hedging and trading. So it's primarily used for hedging or for trading. I'll be talking about that as well. Stocks are non-leverage instruments, whereas options are highly leveraged. Just to give you an example, right now Nifty is around 13,000 levels. So if we multiply it by the lot size 75, so roughly around 9.5 lakhs, so somewhere would be with the value of the contract. Now, if you buy a 100 rupees premium option for Nifty, so the premium which you total premium you pay is 7,500. That is less than 1% of the total value of the total contract. So you have to understand that derivative instruments, futures, options even more, they are highly leveraged instruments. So when you're trading them, you can't trade them like stocks. You have to trade with a different mindset, with a different risk management, with a different time frame. Then you have a chance of succeeding in options. So you have to understand here is that if trading in stocks can be said to equal to driving a car, trading in options can be compared to flying an aeroplane. Both are world apart. Both are different instruments altogether. Both have to be treated differently. You can't treat them the same way. So hope I am clear so far. So now we'll come to the options. What exactly are options? So you had some idea as to what exactly is this. So options basically they are instruments, derivative instruments, wherein you have a buyer of option and a seller of option. So in this case, The buyer of option has a right but no obligation to buy a specified underlying at a set price on or before a specified date, meaning you have the opportunity of buying a call option or a put option. So I'll be sharing examples with you and explaining that in detail, don't worry. So now if you look at it, there are basically two types of options. You've got a call option and you've got a put option. So if you are bullish on the market, meaning you have a, like we are currently seeing a bull market. So if you are bullish on the market, you can either buy a call option or you can sell a put option, because for every trade to happen, there has to be a buyer and a seller, then only the trade can get executed. So if you are bullish on the market and you buy a call option, that means someone has to sell a call option, then only the trade can get executed. So for every trade, there has to be a buyer and a seller and a consensus of the price. Okay, that I'm willing to buy at 100 and someone is willing to sell at 100. Then only that trade gets executed. So you have this call option. So if you're bullish on the market, you buy a call option. But the one who's selling the call option, this is an important understanding. One who's selling a call option, he will be bearish on the market or he might have some strategy. So you have to understand that. That means people always have divergent views in the market. If you are bullish, definitely people will be there who will be having a bearish view on the market. But overall, if you are bullish on the market, you will buy a call option. If you are bearish on the market, you will buy a put option. Majority of the people are into buying of options because one, the few reasons I'll talk about that, and what are the things that you should not do, that also I'll be talking about. So if you are buying a call option, what happens is that, as I explained earlier, you pay a small premium. So by paying say 5,000, 7,000, or even on expiry days it can be as low as 1,000 rupees, you are taking a position worth 9 lakh, 9.5 lakh rupees. For Nifty, of a bank Nifty, to be around 6.5 lakh. So you, by paying a very small premium, you are taking a huge position, so the leverage is huge. But you have to understand that options is all about timing. It's not stocks that you buy and hold it for long. Options is all about timing. You hold it for a few days, or even on expiry day, you see the value, the premium, the way the value of the premium declines, falls. So it's all about timing when trading options. So I'll come to that as well. So here I want to talk about is that call option. You buy a call option when you're bullish. You buy a put option when you are bearish on the market. Now, one important distinction here is that there are people who will sell a call option naturally. There are people who will sell a put option. So when you are buying a call option or a put option, you pay a very small premium. But anyone who is selling a call option or a put option, the premium is almost equivalent to the futures premium margin, futures margin. So it's significantly higher, many times higher as compared to a call option buying or a call option or a put option buying. This is a very important distinction which you should need to remember. So never start with selling options if you are new to options. Even if you have a lot of money, never start that. First learn options, understand options, maybe then you can get into some strategies. We will be having sessions there as well on strategies, option strategies. But here I want to concentrate more on the key fundamental areas where you need to stress on options. So this is a screenshot I have taken from the our angel broking mobile application. You can see the option chain. So here it is, this is today's as well. So here if you see here, this is the option chain of Nifty 3rd December expiry, and you look, it's a call option, 13,000 strike price. So its premium right now is trading around 111. So you have to multiply it by 75 because that's the total premium that you pay. And then here you have the calls, here you have the puts, so here you have the strikes, and you see this highlighted area, this is the at the money option. So you have at the money option, and then you have out of money, and then you have in the money. So you have all these options which are there, and then you have this OI. I will be talking about OI as well. OI is open interest. So we will be looking at that as well. So hope so far it's clear. So now the next question comes is, why trade options? Why basically people want to trade options? So one is that effective hedge. Say for example, someone had Reliance at 2200 levels, and from there Reliance corrected significantly. Now he didn't want to exit his position. So what he could have done, he could bought at those levels, he could have bought an ATM. at the money. I'll be talking about what is at the money, what is in the money. He could have bought an ATM put option. So his Reliance stock he would have lost money there, or his profits would have eroded. But on the put, he would have made money. So there are certain strategies where you can do that as well. But for that, you require to have the quantity of stocks which are equivalent to the lot size of the stock. Like Bank Nifty, you have lot size of 25. Nifty, you have a lot size of 75. So for all the various stocks, there are different lot sizes. So that's a way of hedging. So it can be used for hedging by those who have positions of that. So that's one advantage of options. Second is you have attractive return, meaning I'll just show you with an example how that works out. Meaning the margin which you require is very small. So if for example, I just showed in this previous slide, you have this 111. So if you look at this 111 is the premium. So you multiply it by 75. So roughly you can say around 8,000. So by paying 8,000 rupees, you are building a position more than 9 lakhs. So you are having by a small capital, you are taking a huge position. So that is the advantage of trading options. So by a small capital, by using a small capital, you can take a huge exposure. But at the same time, I'll be talking about the cons as well. Then the next part is limited risk. If you are an option buyer, your maximum risk is limited to the option premium that you pay. That is an important distinction. Meaning, if you had bought a put option of say 12,000 or 12,500 and say at a premium of 100 rupees, now it's close to 13,000 or so. So if we look at that, so your premium would have been reduced to zero, almost nothing. You would have not, but you will never lose. If you are on the buying side of options, you will never lose more than your premium. But if you are on the selling side of options, your loss is limitless. There is no end to the loss, because the market, if it keeps on continuing to go up and up and up, you are in for a loss. So that's an important distinction which you have to understand. So then the next question comes is that if option buying is so lucrative with a so small amount of capital, then 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 how to really trade it? Because there are some pitfalls, means there are some areas where you have to focus also. What is that which I talked about? That is time. You can't buy an option and hold it till expiry, just hoping and praying. Even if the market or the stock moves in your favor, by the time of expiry, you will find that the option premium is decreasing every day, every minute. So when you buy options, you have to have a short period of time horizon. That makes more sense. Or if you want to, or for index, you can go for monthly options and you can hold if you want to do that. That's one way. But primarily, it's more or less, if you're trading weekly options, then it's all about timing. You can't simply buy on one day and keep on holding. You have to look at timing. So far it's clear. Then as I said, it's limited risk. Then less price and high volatility. So what I want to say here is the fourth point is that options, you have less price, meaning with a small premium, you can volatility is very high. I'll show with an example shortly. Because you will find that an option premium from 20 can go to 200, and from 200 it can come to 20 the same day. So that's the reason you have to be when you're trading options, you need to really understand what you're doing. You just can't trade. As I said, luck will play in the short term, but long term, no. Your knowledge, your experience, your money management is what is going to save you. Then operational in all market scenarios. So trading options, you can trade in a bull market, you can trade in a bear market, you can trade in a sideways market. So there are different types of option strategies for that. You can trade plain vanilla options, that is buying a call or buying a put. So we'll look at that as well. So now we will come to the aspect of money in the money. What is in the money? Something called ATM, ITM, OTM. This is a very important concept. So I will cover that. And then we'll look at some option Greeks, and then we'll take some practical examples in the market as well for your understanding. So generally, what happens is that if you're looking, if you're looking at the in the money options, just to give you an example, I will take it here. This will be a better example for you to understand. So if we look at the option, this is the call option and the put option. So if we look at this, so this is the at the money. So roughly this is the at the money. So for all the strikes which are below the price, means below the prevailing price, they are in the money for call options, and all the strikes which are above the prevailing price, they are out of money for call options. So if you see, and the premium will tell you, so you don't have to too much of rack your brains, because if you look at this, just look at this 13,000 call option, this is today's data, this 13,000 call option is at 111, 12,950 strike is at 138, 12,900 is at 168, 12,850 is at 199, roughly 200, 12,800 strike call option is roughly at 236. So you see, this is all in the money, and it is called deeper in the money, deep in the money. So as you go deeper, so there is something called delta. I'll talk about that as well going forward. So you will get to understand that. This is something which you look, and you see all the options which are above the 13,000 strike, because currently price is around 13,000. So these are out of money. So 13,050 is available at 88, and these are 3rd December expiry. So the 3rd December expiry, which is on the next Thursday, it is those strikes. So you can see here that first of all, this is Nifty derivatives. This is 03 December, that is 3rd December 2020. CE means C is for call and E is for European. So it is called CE, and this is the strike, 13,000 strike. So what you are seeing, that 13,000 strike, the highlighted is the ATM. All in below the below this, the prevailing price is all in the money for call option, and above is out of money. So you'll find that out of money options are cheaper. So if you buy a 13,250 3rd December strike, you can buy it at 29.25, means roughly around 30. So 30 into 75 is roughly around 2,400 rupees or so. And this is the other column, and this is on the Angel Broking mobile application. So you get all this information there real time. And this is OI, open interest. So you get to see which strike. So you see here that the ATM is having somewhere around 30.8 lakh OI. Then you have got 12,750, somewhere around 20. This is very less. It is only 1,000. So you're seeing that out of money options, that 13,100 is somewhere having around 20 lakh OI. Then 13,200 is having around 20 point, I mean somewhere around 21 lakh OI. So slightly out of money options are the options where you find a lot of OI. So they are ones which you can trade. So I'll be talking about that as well. Likewise, if you look at the put, it is completely reverse of the call. This is an example. If you just pay attention, see here what happens is that you see, this is the call option and this is the put option. This gray is the at the money. So you see that for the put option, the higher the strikes above the prevailing price, they are more expensive, 152, 183, 217, 250. So these are in the money for puts. So what is out of money for calls is in the money for puts. And see here below, for all the strikes which are below the prevailing price, they are out of money. They are 102, 82, 65, 51, 40. So it is just the reverse of calls. So it's very easy to understand. You just have to look at the prevailing price and which is the ATM. So this application, our Angel Broking mobile application, I automatically it highlights which is the ATM. So for call, all the above strikes are out of money, all the below strikes are in the money. For put options, all the above are in the money and all the below are out of money. It's very simple. So you can here you can see OI, which is OI. So you don't trade in those strikes where the OI is very less. I'll be coming to that later. So hope this is clear. So this was a theoretical part, the same which I have covered here to explain to you. So hope that is clear. So now we will look at something called the intrinsic value, time value, key Greeks. So this I'll just briefly touch upon you, and yeah, there is some good news I want to share that very soon we'll be having this option Greeks also available in our mobile application. So that also you would be able to look at that. So that could be another interesting aspect which you can look at. That so you'll be getting live Greeks as well on the application. So basically this is I'll be talking about two things that if you look at this particular chart which I showed you of the option chain for this option chain. So all these strikes which are for the call option which are below, they are in the money, they have intrinsic value. So all in the money options have intrinsic value, all out of money they don't have intrinsic value, what they have is only time value. So this is something which you need to understand. Now we will come to something called delta and theta. This is a brief, I will be touching upon it because for your knowledge it will be helpful. So delta, you have to understand that delta can be one. What is delta? Basically, it refers to the percentage move the option registers in comparison to its underlying. So for example, if a stock option has a delta of 0.65, this means this means that if the underlying stock rises in price by rupees 1, the option on it will rise by 0.65 per share. So delta will tell you how much the option will move with underlying to the with example to the underlying. So that is something which you can definitely look at. So delta is a way of looking at how the strike is compared to the overall the value, the current value. So you will find that in the money options they have higher delta, and out of money they'll have low delta. So that's something which you need to understand. So delta is so when if you have access to the data, you can definitely look at it. Otherwise you can I'll give thumb rules as well. So delta basically refers to the percentage move in the options with regard to the underlying move. So that's one. The second thing which I want to talk about, the key Greek, is theta. This is something which is again important. So theta, it measures the options rate of decay over time. What happens is that I gave you an example earlier that if you are buying a call option and the market is not going anywhere and the market is trading sideways, so after an hour, if you are looking at weekly options, after an hour you will find that the premium of your call option, if you have bought a call option, the premium will fall. So you'll think, array, the price has not moved anywhere, so why is the option premium, why is the option premium why is the option premium going down? Because that is theta. So so theta is an enemy of an option buyer. This is something which is very important. That's why I started with saying that options is a lot about timing. How you time the market is something which is important in options trading. For strategies, you can have wherein you can have different types of strategies. So whenever you are trading options, you need to keep that on the back of the mind that if you are buying options, then you have to be observant of the time. So these are two key Greeks which I wanted to talk about, delta and theta. So that is something which you can definitely look at. If you have available, you can look at. Otherwise, you can, yeah, we look at an example as well, and I'll explain that with live examples. So we will look at that as well. So now what we'll do, we'll look at some example on the real-time market, so that will give you a better perspective. So so if we look at this, yeah. So if we look at this what I'm looking at, I'll just remove all this. This is for we'll just see right now. If you look at Nifty is trading around 12,950, 960. So we will look at, say, a 12,900 call op. We'll look at a first of all a call option. So 12,900 call option. And there are certain things. These are I would say the charts of Nifty call option, that 12,900. You can get these on the Angel Broking mobile application as well. You can plot them as well. You can use them as well. So this is a chart which I am looking at of the Nifty call option. So this is a Nifty call option, 12,900 strike. So this is what I was talking about. On 20th of November, that is last week, this strike was trading at around 90. So it opened at around 90, traded around 100, and the same day and the next day it went to 200, and the next day it went to 300. So it multiplied almost, it went up thrice, and then just see from 300 in 2 days it's back to the same level. And then again, if you see here, it's somewhere moved to around 200. Now it's around 160. So what I'm trying to say is that someone said कि हिंदी में भी बताइए. हाँ, हिंदी में भी मैं बताऊंगा कि ये जो ऑप्शन है ना, first I'll just cover this in English and I'll talk about. So options is all about volatility. It is highly volatile. So it's all about timing. Now, for example, if you had bought here this call option and you were holding it for days, so you would not have made money, back to square one, and then maybe you would have made some money. So option is all about timing. You should never trade options like you are trading stocks. Options को कभी stocks की तरह trade मत कीजिए. दूसरा क्या है, जो जो डेल्टा है ना, वो आई विल जस्ट शो यू. We will look at the strikes which I talked about. So what we'll do, we will we will just look at NSE. We'll go to the NSE site, and so you can go to the NSE site as well, wherein you can see, apart from that, as I showed in Angel Broking mobile application also you have. So here I have in the equity derivatives, I have written Nifty, okay, and I have just selected Nifty. So I have this Nifty derivatives. Now here you see there is something called option chain. So you click on option chain, and so you will see that this is Nifty I have selected. This is the, by default it's the latest expiry, so the 3rd December expiry, and here you get to see all the strikes. So you have the call options here, you have the put options here, you have the strikes, you have the OI. How is the OI? How is the OI changing? But you don't have all the Greeks which are there. They are not available here. But I will just give you a thumb rule. So here, if you see for this Nifty 12,950. So all these 12,950 and above, you can see this slightly colored here. They are from here you will see they are all out in the money options for Nifty, because they are deep in the money of options, and above that you will say they are all out of money options. So you will find that the options are cheap. If you look at the LTP last traded price, you are having 13,500 options available at 6 rupees. So you should understand that just because it is so cheap, you should not go and buy them. You have to have some reason to buy deep out of money options. Likewise, you get to see all the strikes here, the open interest for the put options. So you can see in the OI column which strike has got maximum OI. So you will find that in calls, if you look at in calls, so you will find somewhere around that 13,000 has got 34,89,525 OI here. If you look at put, so in put you will find that somewhere around 26 lakhs or so is around 12,800 for the strike. So you get to know that these are important levels. So that's the advantage of looking at it. So what you need to understand from a delta perspective is that stocks which are deep in the money, they will have higher delta, and a stock which has a delta of almost 1 will behave like the underlying. So if you want to buy futures, rather buy that strike delta. So you will get a mirror of the futures, but the delta, you have to understand that it keeps on changing every second. It keeps on changing as the price moves. And out of money will have lower delta, because there the delta will be less. So hope so far it's clear. Now we'll come to the presentation. तो हिंदी में भी मैं समझा देता हूँ कि यहाँ जो ऑप्शन चेन है ना, यहाँ आप जैसे देखते हैं, ये सारा कुछ एंजल ब्रोकिंग मोबाइल एप्लीकेशन पे भी आप देख सकते हैं, वो जैसा मैंने आपको दिखाया. तो यहाँ आप क्या है, 3rd दिसंबर ये डिफ़ॉल्ट है, तो आपको पता चल जाएगा कि कौन से स्ट्राइक्स हैं, कौन से स्ट्राइक्स पे अवेलेबल हैं, क्या ओपन इंटरेस्ट है. ये ओपन इंटरेस्ट का कॉलम है, फिर ये लास्ट ट्रेडेड प्राइस है, तो आप यहाँ देख सकते हैं. तो ये कलर्ड में आप देखेंगे ना, तो ये जितने भी जो करंट प्राइस के नीचे जो हैं, ये सारे कॉल्स में सारे आउट ऑफ मनी है, वो सस्ता होते जा रहे हैं। 110, 87, यहाँ ये 13,700 का स्ट्राइक ₹2.50 पे है। सो डीप आउट ऑफ मनी, सो नेवर 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 बाय डीप आउट ऑफ मनी ऑप्शंस। मतलब डीप आउट ऑफ मनी ऑप्शंस मत खरीदिए अनटिल अनलेस आपके पास कोई स्पेसिफिक रीजन हो, कोई कारण हो, कोई स्ट्रेटजी हो तब, otherwise not advisable. So hope so far it's clear. So now we will come back to the presentation, and I want to show you something here as well as on the option side. So like this is Nifty. Now I'll just cover this, and then we will come back to. So look at this Nifty. So this was I will just show you some examples here. So this was on 30th of October Nifty. So someone is seeing that the overall trend is down, and someone is buying around 11,600. So it requires, see, you have to understand that to be successful in the markets you have to have courage also. मतलब आपको करेज भी चाहिए, हिम्मत भी करना होगा एट द राइट टाइम राइट डिसीजन लेने का और एग्जीक्यूट करने का. दैट इज पुलिंग द ट्रिगर. दैट्स समथिंग व्हिच इज वेरी इंपॉर्टेंट. And you have to be prepared for anything in the market, because market, who would have expected that this day Nifty will fall like this on 25th of November, this red candle which I'm talking about, that Nifty will fall like this, such a big fall. But you have to be prepared for everything in the market. That's something which you need to understand. You can't say ye kaise ho gaya. So you can't say all that. You have to be like a soldier. Be prepared for anything. Anything can happen. Any bullet can come from any side. You have to be prepared and save yourself and your capital. So that's very important. So just to give you an example, so this was around 2nd of November, 30th of October. So Nifty was at around 11,500, 700. So now we will look at the some option. So we will look at 12,000 option. So 12,000 option November contract. So November is over. So we look at a December contract. So if we look at December contract, because November, so someone want to buy for a long term. So this December contract for 12,000 was available at around 200 rupees. So 200, and currently is trading around 1,000 rupees. So you can see that it has gone up almost fivefold. Five means it has gone up to 1,200. So currently it's around 1,000. So it's gone up fivefold. But the big question is, who will know that it will go so much? Generally, people book options, book profits very fast, but when they are losing they will hold on to the trade forever. So you have to understand कि when you are in profit, when majority of the people what they do, when they are in profit they become a trader, and when they are in loss they become an investor. मतलब क्या होता है, जब प्रॉफिट में रहते हैं तो ट्रेडर बन जाते हैं, और जब लॉस में होता है तो इन्वेस्टर बन जाते हैं. बट इफ यू रियली वांट टू मेक मनी इन द मार्केट यू विल हैव टू रिवर्स दैट. मीनिंग व्हाट, कि व्हेन यू आर इन प्रॉफिट then you become a investor, and when you are in loss you become a trader. Means loss है, उसको position को square off करके निकल जाइए, hold on to your winning trade. So I will be talking about that as well. So this is, but someone, if you are buying here, someone is selling also. So unlimited risk for the seller of option. If he just sold and he's not doing anything, so he's wiped out. So you have to understand that options gives you huge opportunity, but at the same time you will have to spend time learning, experiencing, and also protect your capital. मतलब अपने capital को भी protect करना है. तो ये जैसे मैंने आपको निफ्टी का दिखाया. Now what I'll do, we'll look at a nifty. We will look at just one second. So we will look at a 13,000 strike. So we look at a nifty put. Today's, we will look at how the market has behaved today. So we will look at that. So this is a nifty put option, 13,000, 3rd December expiry. So what I was telling, that yesterday it was at around 235, currently it's around 115. So someone would have bought here at 230, he's lost money here. So someone would have, now this is a put option, but if you look at a call option, 13,000 call option, 13,000 call option, from 60 it went to 145, currently it's double. So if someone would have bought a call option, he would have doubled his money. But the key question is when to buy a call, when to buy a put. That's a very $1,000,000 question. So for that you have to understand, for that you need to understand that you can use technicals for that. Technicals are very good for trading. Yes, they will also go wrong. Some you will not be right all the time, but they also can be very helpful. तो technicals को समझिए, technicals को भी सीखिए. Option Greeks जो मैंने बताया, तो उसके thumb rules भी जो हैं उसको follow कीजिए, तो it will be very helpful. So I hope so far it's clear to all of you. So now we will come to the some of the important aspects of how to trade options. Stay away from deep in the money options. Just to give you an example, we will go to the site here of NAC. So you see that right now Nifty is at around 13,000 levels, correct? So if you see deep in the money, so you have this, you see 12,400. So it is now available at almost 600 rupees premium. So 600 multiplied by 75. So roughly around 45,000. If you pay, you will buy one option contract. What is the point in buying this? Until unless you want to buy, you wanted to buy a futures, so you don't want to buy a futures, and here it is very close, deep in the money, then you buy. But otherwise, you don't need to buy so deep in the money. So I will tell you where to buy, and that also is something which you can look. So stay away from deep in the money options. Then second is stay away from deep out of money options. Just say for example, right now if you look at 13,000, so 13,000 Nifty call option strike is available at 110, but a 13,500 is available at 6 rupees. But if I buy a 13,500, do I expect Nifty to rally to 13,500 in the next 4 days? Because this expiry is on 3rd of June. So why should I buy? So this is a majority of the people, many of the people who are those who are new to options, they'll say कि it's cheap, सस्ता है तो उसको खरीद लो. So just because वो सस्ता है तो उसको नहीं खरीदना है. So I will give you the thumb rules that which options you should ideally trade. Excuse me. So so far I hope it's clear. So we will look at some other aspect. So generally what you should trade. So you should never trade deep in the money options. You should never trade deep out of money options. So what is it that you should trade? You should trade slightly out of money, at the money, or slightly in the money options. So now we will look at an example. So that will give you, we'll look at both on a chart perspective, and also we will look at from this from the NSE. Here we can see. So if you see 13,000 call option is that available at 110. That means you are more or less buying, you can buy this call option. 13,050 call option which is slightly out of money, and for Nifty the strikes is 50 points away every strike. For Bank Nifty it is 100 points away. So if it is 30,000, the next will be 30,100, 30,200, that sort of thing. So you can see that 13,050 for 3rd December is at 87, 13,100 is at 67. So ideally what you should do when whatever is the ATM or whatever is the current price of Nifty, so you look at that strike and you can trade two strikes above, two strikes below. Means two strikes in the money, two strikes out of money. Maximum, that is where 4-5 strikes you should trade, because that gives you a better opportunity, better probability, better possibility of making money. Buying too deep out of money options I will not recommend, or deep in the money options also not recommended. Until unless you wanted to buy a futures and you don't want to invest that much of money, then you can buy a deep in the money options, because there the delta is more. So there you will find a significant higher move. So hope that far it is clear. So when you are buying, it's slightly out of money, at the money, or slightly in the money options. So then you have to understand is that many people, बहुत लोग क्या होता है वो deep out of money options खरीदते हैं. Now just to give an example here, say you are buying a 13,500 call option at 6. So how much you are paying? You are paying only 6 into 75, that is 450 rupees. So by paying 450 rupees, you are buying a contract which is worth more than 9 lakh rupees. So don't look at buying cheap. It is not a good idea until unless you have a very valid reason. So options, when you are buying, look at buying at the money or slightly two strikes above, two strikes below. That's the way you should look at trading. Yeah, but see, deep in the money options, there's a question. Deep in the money options, they have delta which is very high, and maximum delta can be 1. So they will, the delta which is close to 1, that is almost mirroring the futures. So that is there. But don't buy deep out of money options. Deep in the money still you can buy, but if you want to make a good money on your capital, then slightly two strikes above and two strikes in the money, two strikes out of money, other strikes, 4 5 strikes wherein you should look at trading. But yeah, if you're this I'm talking about the weekly options, but if you're looking at the monthly options, because yeah, this again is a very important concept, just to give you a perspective here. So we will look at this. This will also be very helpful to you. Yeah. So now if you see, uh, look at this. So if you find here, I am looking at a this is a 13,000. You see, this is a 13,000 3rd December expiry contract. So yeah. So if I look at it, it is trading at 124 rupees. But if I am looking at a 13,000 December expiry, so that which will expire when on just let me have a look. So which will expire on 31st of December, if that is the day, the last expiry. So that is trading around 293. So if you want to buy a Nifty call option which expires on the last Thursday of December, you will pay 293 premium. But if you want to buy a Nifty call which is expiring next week, that is 3rd of December, you will pay 125. So the closer to the, so this is what is time decay, which is again important, because if you buying a Nifty call option which will expire on next Thursday, so there the premium is 124. So you have only 4 days to hold your position. But if you're buying a Nifty call 13,000 strike which is till the last of December, last Thursday of December, so you have more than 20 days, roughly more than 20 days to for your position to work in your favor. So hope that is again important. So yeah, take another session. Yeah, definitely we'll do that. Is option buying better than option selling? That's a multi-million-dollar question by Subhajit. See, if you can really learn to time the market through technical analysis, option buying, I would say, is the best thing. If you can time the market, there's nothing like it. It can do wonders, because your risk is limited and you can really on a small capital. But what you have to understand is that if you don't know how to time the market, or you don't spend the time to learn to time the market, then option buying, you will be you and then you should never buy and hold on option till expiry, just for that means you bought, because every day the premium will decline. So that's something which is important to understand. Like for example, just today only, if you're looking at a Nifty call option 13,000, from 145 it came down to 105. Currently it's around 122. So the volatility is very high. Today's still we are seeing less volatility there. So what I'm trying to say is that you need to understand, and weekly options, you got for index, you got weekly options, you got monthly options. For stocks you have got monthly options, so you can look at trading. But what you need to understand is that when you are trading stock options, you have to trade only those which are liquid. Otherwise, yeah, there's a question, please explain with a stock option. I'll take that as well. So before that, Shubhajit, yeah, option buying definitely I would say is better than option selling, provided you learn to time the market. Because option selling, then a naked selling you should never do. You should look at strategies in option selling. But option buying, yes, if you can learn to time the market and do, because just to give an example, yesterday this Nifty weekly 13,000 call option was available at 62, and yesterday only it closed at 140 towards the end of closing. So roughly two times, matlab it doubled, the option premium doubled. So, but can you time the market? Can you hold on to your winning position? Those are important questions which you'll have to answer. So hope that answers this. So due to then the next question is example of a stock option. Yeah, we look at a stock option. Say for example, we'll look at Reliance. Yeah, Reliance is very liquid. So we first of all, yeah, and if you want to trade options, na, you should look at the underlying chart. You can look at an option chart, but your decisions have to be based on the underlying stock. Say for example, I'm looking at Reliance. So Reliance, if you see, is completely trading sideways for the last few days, 3 4 days. So we will look at an option of Reliance, how Reliance option is trading. So we look at a Reliance's call option. So if you see Reliance call option, which was 160 on 17th of November, currently it's around 60. So it's, you see the volatility which is there. So we look at, for example, HDFC. We will look at HDFC call option and a put option. So, so this is HDFC call option. Sorry, HDFC put option. So this was a 2200 December expiry, which was at 35, went to 95, currently trading around 60. So a stocks, you, if no matter if you're trading index or stocks, you have to look at the underlying chart. That is something which you need to understand. You have to look at the underlying. Never trade on the options. Means my advice is not. My advice is don't trade technically on the options chart. You can do that, but time decay sometimes. Na, if it doesn't move in your favor or the market is stagnant, the option premium will decline. So rather, and your stop loss might get triggered if you put on the option. So rather look at the underlying stock, and then that can be a better way of trading. Yeah. Thank you. There's a, then due to volatility stop loss. Yeah, how can I overcome it? This is by Abhi. Abhi, what you need to do in terms of volatility is that you have to stops which are at technical levels, and also put your stocks stops. Put your stops. Now, just to give an example, so we will look at Nifty, and we are looking at a 15-minute chart. So you see here, just this was day before yesterday. Now just see here what has happened. From here, Nifty, yesterday we look at an example. Yesterday Nifty opened slightly higher, came down, then bounced back, and then again, if someone had bought here, his stop loss would have got triggered. So when you are putting your stop loss, now look at some important lows, and then put a stop loss. That will prevent the chance of your stop loss getting triggered. And also go with the flow, because that is something which is very important. You have to go with the flow, and you can use pivot levels. You can use crucial support levels for stops and resistance, and you can use important moving averages for stops and resistance, for support and resistance. That also can be there. So I think that's there. Hindi, yeah. Thank you for your feedback, शुभदीप. देन हिंदी में भी बोलिए. हाँ शेखर, ज़रूर. वो काफ़ी देर से मैं इंग्लिश में बोल रहा था, मैं हिंदी में समझाता हूँ कि जब आप ऑप्शंस ट्रेड करते हैं ना, तो आपको ऑप्शंस के चार्ट, तो आप ऑप्शंस का चार्ट देखने में कोई प्रॉब्लम नहीं है, मैं भी ऑप्शन का चार्ट देखता हूँ. बट अंडरलाइंग का चार्ट, जैसे आप निफ्टी का चार्ट देखिए, फिर आप निफ्टी के कॉल ऑप्शन में बाई कीजिए या पुट ऑप्शन में बाई कीजिए, या फिर कोई स्ट्रैटेजी करना है तो कीजिए. लेकिन सिर्फ ऑप्शन के चार्ट को देख के ट्रेड मत कीजिए, बिकॉज दैट्स नॉट अ गुड आइडिया. बिकॉज ऑप्शन का क्या होता है, यदि मार्केट साइडवेज चलेगा ना, तो ऑप्शन का प्रीमियम का वैल्यू घटते चला जाएगा. इसीलिए जो मैंने एक इंपॉर्टेंट स्टेटमेंट कहा था कि टाइम इज एन एनिमी ऑफ एन ऑप्शन बायर. जितना लंबा समय आप अपने ऑप्शन को होल्ड करके रखेंगे, वो उतना आपका टाइम डीके आपके अगेंस्ट चलेगा. लेकिन मंथली ऑप्शंस में यू कैन डेफिनेटली होल्ड ऑन टू. यदि आप लंबा ट्रेड कर लेके रखना चाहते हैं ऑप्शंस में, तो आप मंथली ऑप्शंस में यू कैन बाय एंड यू कैन होल्ड ऑन टू. बट गो विद द डायरेक्शन ऑफ द ट्रेंड, देन यू स्टैंड अ वेरी गुड चांस ऑफ making money if you are able to identify the right direction of the trend. So I think those were some questions. I'll just look at my presentation, what is remaining, and then I'll take your questions. So I think that will address that. So this part I have covered. So yeah. So now I'll just cover few things, and then I'll take your questions. So what you definitely shouldn't do while trading options. मतलब क्या नहीं करना चाहिए. मतलब whenever you are trading, have a stop loss. मतलब you should definitely have a stop loss. It can be helpful. Never average a losing position. Means if you are taking a trade and which is going against you, don't average. That's not, in trading you should not do. Then don't be eager to trade in the first 15 minutes of the day. मतलब पहले 15 मिनट में ही ट्रेड लेना है, वो कोई जरूरी नहीं है. Just to give you an example, look what happened here. Nifty, this was 24th November, and this is excuse me, 25th November. Nifty closed here. First 15 minutes was the high of the day, and just see the way Nifty cracked. So someone would have bought here, he got trapped. So avoid. See, even today, first 15 minutes, the high, if someone would have bought here, got trapped. So just don't look at jumping into the first 15 minutes. Wait for the trend to settle, wait for the market to settle, then get into. It's very important. Then what you should definitely not do, don't hold on to your option trade for days without reason. मतलब आपके पास कोई कारण नहीं है ना, तो ऑप्शन ट्रेड को, ऑप्शन आपने खरीद लिया, बोले प्रीमियम जीरो का जीरो, डोंट, क्यों जीरो क्यों होने देना है उसको? Why you want your premium to go to zero and then you will just let it expire? No, save as much as money as possible, but there has to be some reason as to why you are exiting your trade. And what you should not do, don't be emotionally attached to your position. आपने एक पोजीशन ले लिया, अब उसको आप इमोशनली अटैच, नहीं नहीं मैं तो इससे बाहर नहीं निकलूंगा, आई हैव टू होल्ड ऑन टू दिस पोजीशन, नॉट अ गुड आइडिया. You should have a logical reason to enter a trade, logical reason to exit a trade. Then buying the cheapest options and hoping for a windfall. मतलब वो लॉटरी टिकट लेते हैं कि नहीं, सस्ता वाला जो एकदम चीप वाला है ऑप्शन, 2 रुपया में मिल रहा है. मैं निफ्टी की बात कर रहा हूँ फॉर एग्जांपल, डीप आउट ऑफ मनी ऑप्शंस आपने खरीद लिया, तो वो क्या है, वो 2 रुपया वाला आप ले रहे हैं, वो हो सकता है ज्यादातर टाइम आपका एक्सपायर वर्थलेस ही करे. तो डोंट गेट इनटू दैट, दैट्स नॉट अ गुड आइडिया. कभी कभार हो सकता है जैकपॉट लग जाए, बट वो फिर क्या होगा, एग्जिट. समवन आस्क्ड अ क्वेश्चन, आई विल आंसर दैट एज वेल. एग्जिटिंग, क्योंकि 2 का यदि 4 होगा तो शायद आप निकल जाएंगे, लेकिन हो सकता है वो 2 का 200 हो जाए, तो क्या आप 200 तक होल्ड करते? तो ये बहुत इंपॉर्टेंट क्वेश्चन है. दैट्स समथिंग विच यू हैव टू आंसर. सो सम कॉमन मिस्टेक्स बाय इन्वेस्टर्स, जो इन्वेस्टर्स कॉमन मिस्टेक्स करते हैं, ट्रेडर्स कॉमन मिस्टेक्स करते हैं. लैक ऑफ नॉलेज. नॉलेज गेन करते रहिए ओवर अ पीरियड ऑफ टाइम. ओवरनाइट कोई नहीं सीखता है, लेकिन आप ओवर अ पीरियड ऑफ टाइम व्हेन यू गेन नॉलेज यू विल बी बेटर प्लेस्ड. लैक ऑफ पेशेंस, पेशेंस भी रखना जरूरी है. मार्केट विल ट्राई टू एंटाइस यू, मार्केट विल ट्राई टू फोर्स यू, so you have to have patience. That's something which is very important. The next is emotions. मार्केट में इमोशंस के लिए कोई जगह नहीं है. देयर इज नो प्लेस फॉर इमोशंस इन द मार्केट, बट मार्केट वांट्स अस टू बिकम इमोशनल. So if you can keep your emotions away from the market, you stand a very good chance of making money in the market. And risk management is very important, money management is very important. बहुत ज्यादा रिस्क मत लीजिए किसी एक ट्रेड में. टेक 2% 3% रिस्क ऑन अ पर्टिकुलर ट्रेड. मतलब लाख रुपए है तो 2,500-3,000 का रिस्क लीजिए, ताकि यदि 30-40 ट्रेड आपके गलत जाएंगे लगातार, देन यू आर आउट ऑफ द मार्केट, बट दैट विल नेवर हैपन. सो यू विल हैव सफिशिएंट टाइम टू लर्न. एंड ऑल्सो you can take more risk on your profit. So 1 lakh becomes 1,50,000, तो 50,000 जो प्रॉफिट है उस पे आप 5% रिस्क लीजिए, 10% रिस्क लीजिए, अपने कैपिटल को प्रोटेक्ट कीजिए. कैपिटल, यू शुड प्रोटेक्ट योर कैपिटल एज समवन प्रोटेक्ट्स हिज ऑक्सीजन सप्लाई. जो हॉस्पिटल में पेशेंट को लगा रहता है ना ऑक्सीजन सिलेंडर, तो वो ऑक्सीजन सिलेंडर इज हिज लाइफ लाइन. तो वैसे ही आपको अपने कैपिटल को भी प्रोटेक्ट करना है. दैट्स समथिंग विच यू नीड टू अंडरस्टैंड, वेरी इंपॉर्टेंट. So that's which I wanted to cover. Then lastly I will be talking about this put call ratio, PCR, which is the total number of puts divided by the total number of calls. So total open interest of the puts by the total open interest of the calls. इसमें there are different ways of calculating. Some use volume, some use open interest, some use the current expiry, some use the monthly expiry. But generally you should look at overall open interest कितना है. That you can get at NSE also. Here I have shown. You can get the put call ratio index options here. This highlighted part is the put call ratio. You can look at here also. But there are different ways. This is something which you should definitely use. Higher put call ratio में इसको contrarian indicator के रूप में भी use करते हैं. Put call ratio means if puts are high, means just to give an example, if a put call ratio is 1.5, तो पुट्स ज्यादा है बिकॉज इट इज टोटल नंबर ऑफ पुट्स डिवाइडेड बाय टोटल नंबर ऑफ कॉल्स. सो पुट्स ज्यादा है सिस्टम में कॉल से. सो व्हाट मेजॉरिटी ऑफ द पीपल विल थिंक दैट पुट्स ज्यादा है तो द मार्केट इज बेरिश, बट एज आई सेड इट इज अ कॉन्ट्रेरियन इंडिकेटर. बहुत ज्यादा पुट्स हैं इसका मतलब है कि द मार्केट कैन ऑल्सो बी वेरी बुलिश, बिकॉज मेजॉरिटी पीपल आर एक्सपेक्टिंग द मार्केट टू गो डाउन, बट देर आर सम पीपल हु आर एक्सपेक्टिंग द मार्केट टू गो अप. So the possibility of that minority is, probability could be higher. So you can look at this put call ratio. So I think there are many things which can be covered. We'll have in other sessions. But I think I will stop here because there are some questions as well. So we'll look at the questions. So we will take the questions now. I hope you all had some good understanding on the options. So we will look at that. So we will look at those questions. Yeah. So I will now take the questions, and we will then conclude the session. So yeah, definitely I'll take another session. Please upload this video. Yeah, it will be there in advance. Any call or put option without buy, then after buy. I couldn't understand Ramji आपका ये question. Sir, please show how to use option chart in angel broking terminal. That I'll not be able to show right now, Shubhajit, but we'll cover that as well in some session. Is it necessary to complete the trade in option? If it is worthless, if the option has no value, then it can expire worthless, but you lose your money. Why you want to lose your entire capital? Learn to protect your capital as well. If the trade is not going, see one important thing. If you are trading weekly options, generally 1 to 2 days is maximum. You should look at holding your positions, because if you are holding till expiry, the probability of you making money will be low. Likewise, if you are looking at buying a monthly expiry option contract, so you should look at the first week to 10 days. If it's moving in your favor, you will stand a chance of making money. Because otherwise, what will happen, if it's not going anywhere, every day the option premium will decline, and then after 10 12 days the market, even will it will rally, maybe your option premium will not increase. So option is a lot about timing. So if you can get some understanding there on technicals, it can help you. Then how long stop loss is valid in angel broking in all segments? See, currently the stop losses, you'll have to have the intraday stop losses as well. So that is that's there. I want to learn option trading. Where can I get it? I would say, Abhik, if you can look at our videos, there you will get to learn a lot. There also, I think options are explained in detail. Also attend our, I would say, options webinars are there on YouTube. We have got technical sessions are there that I think you should definitely attend. So that also will be useful. So what charting software are you using? This which I'm using is Falcon 7. So then there's a look at. So apart from that, there are some questions. So what I would suggest is that you can definitely, I think, write to me. My email ID, you all can make a note: amar.singh @angelbroking.com, amar.singh SINGH angelbroking.com. That's something wherein you can write to me, and you can also visit our YouTube channel. You get to learn a lot about it. So I think that's it from my side. No, there's one part I would just wanted to cover. I will just cover that as well. The this is the open interest interpretation. This again is important. I want to cover this. So we will look at this. So open interest, and we have got something on the angel broking mobile application as well. That's something which you can use, which is called the FNO. There's the heat map wherein you can see. So open interest is something important. So if open interest in a stock, you find suddenly it is increasing, so that means there's something can happen in the stock. So that is you can look at. So if price is increasing and open interest is increasing, that is the market is strong. Likewise, if price is falling but open interest is increasing, that is the market is weak and the market can continue to remain weak. Likewise, if price is rising but open interest has started falling, that means that market is set for a reversal, or now the trend is weakening. Likewise, if price is falling and open interest is also falling, that is open interest is decreasing, that is now the fall might subside and we could see some consolidation. So this will be available. This will be available on YouTube as well. So I think you should definitely can go through it once again. So look at open interest. That's an important area. And most important is the right psychology to trade. So you have to understand is that trading is a battle. So it's a battle. So you when you pick up your weapon and put your life on the line, would you rather be drunk or sober? So trading is all about being in your senses, being in your emotions. Your emotions have to be under your control. That's something which you definitely need to look at. That'll be there. So that's something which you have to be aware of. That can be very useful. That's something which you should do. So you have to be prepared. I just want to close here that trading, if you are into trading options, you need to control your emotions. One, you need to have discipline, you need to have patience, you need to have the courage and the guts to pull the trigger when the trigger is to be pulled. And it's a war, it's a battle. Your money is on the line. Your money is your risk capital. Your money is your life. So you can't be non-serious in a serious business. It's a very serious business. So you have to understand that. And you can put on any trade, the most self-destructive trade, the most stupidest trade. But as long as you have money in the account, no one can stop you. But you have to understand that you yourself will have to stop you. You will yourself will have to learn how to learn from your mistakes. So you need to, if you want to become a good trader, then you have to focus on investment psychology, technical analysis, money management. These are three things which you definitely need to focus on. Any instrument you trade, be it equities, commodities, currencies, cash segment, FNO, anything, it's very important. So this is one slide. I'll just leave it for you to have a look at it. So with this, I will conclude this session. And in case you have any questions, I'll just leave my email ID here, so you can write to me as well. So I will definitely revert back to you. So you can definitely write to me on this email ID, and I will definitely revert back to you. So thank you once again. And if you have any queries, as I said, you can write to me, and I will be reverting to your queries. Thank you. Mr. Sareen, there is a question which you have asked. So if you can write a mail to me, I will revert back on that and this email ID. Thank you once again, and wish you all the best.